All right, welcome back. Happy Sunday. I wanted to do a little update on the portfolio and positioning because I have some new positions in the portfolio at the moment and just kind of want to give my thoughts on the market at the moment and some of the reasons I have these new positions. If you don't know who I am, I'm Ben Collins, CFA Charter Holder, Chief Investment Officer of Options Autopilot, which is an automated options trading platform. If you want more info on that, check out the description, and we have a good trial deal there. So check that out, and I'll go over kind of the automated trades as well as kind of the directional trades. So appreciate this transparency. Make sure you like and subscribe for future updates. Share with someone who would appreciate this info. So we can kind of dive into it. Just a quick update. Actually was moving Friday and didn't really do much, which obviously that's the helpful part of automation. Things just go on and get taken off with the income trades, and I don't have to pay attention, which is cool, and obviously why we did it. But also had put on some directional trades the day before, maybe 2 days before, and we'll kind of go over those. So you can kind of see, again, I don't like to focus on returns necessarily, but it's just good to see. This is a smaller kind of example account. I did move a little bit more money into here. It's about 30, almost $32,000, $31,700 in here. It's probably averaged around 25,000, just as an example. But you can see year to date, this is TastyTrade, up 17,000 basically. So on even a $30,000 account, obviously that's a pretty huge percentage gain. I'm actually going to go over why it actually would have been a lot higher had I not properly managed my risk, to be clear. But which is good in the long term, but it gets frustrating when you do that and then stocks totally rip and you only get part of the upside because of that. So I'm going to go over that a little bit as well. So you can obviously also see with fees, a little less than 16,000. So again, pretty crazy that fees eat up $1,000 of your gain. It's worth it to me for the automation and the income strategy for that, but it is a pretty high percentage, right? So you got to keep that in mind. And a lot of the reason that it is higher like that is because we're using futures contracts and options on futures for the automated trades. So that is why that is the case, but just be aware of that if you're making those trades. So you can kind of see, obviously, this was a hedge. I've given up a lot of the hedge gain at one point. Basically, you can kind of see that I've left this ES trade on. That's just a put position. It's now totally just a long put as a hedge because I am pretty long via my other stuff. All the MES trades are automated 111s. So if we're just isolating that, $6,000 from 111 trades, and again, this is using it based on the current net liquidity, so it's a little bit off, but 6,000 on roughly, let's say 25,000 on average, still a very good percentage gain, actually obviously higher than 19%. So pretty high return just on that account, just from the automations. Obviously, I'm using a decent amount of this account to trade with, probably at times 50% of buying power. Wouldn't typically recommend that, but you can see it allows you to achieve a pretty decent percentage return. And if we actually looked at how much buying power I'm using, this 6,000, I probably, it's probably at least a 30% return, if not 40% in reality. We just added some of these other metrics in. The win rate on mine is actually way lower because I've just tested with this account. So we try different strategies, or maybe when we're beta testing. So my percentage is actually way lower than typical. But you can kind of see total trades, average profit per trade. Our typical users are getting closer to 95% win rates. Again, we've been on kind of a bull market run, and the 111 typically benefits, in a up market. It can profit in a down market if it goes slow enough, but for the most part, the longest users that have been on the platform are 95%. Some people started at a good time and they're actually 100% win rates, which again, statistically, that's not going to happen or hold long term. But it's kind of funny to see, initially. So On the actual one-on-ones, if we kind of go in here, and again, I'm doing 4 basically different days expiration one-on-ones. I guess this one is 100% run rate so far since I started it. And you can kind of see this average profit and the kind of average profit per trade. So I think this is just helpful metrics to kind of give an example in terms of what's possible. Again, long term, I would roughly say that the strategy is probably should have like an 85 to 90% win rate long term. So you can see again 91% in my 120 day. I think that was one that was shorter. Some of these are a little bit skewed. I can't really show you, of course, customer accounts with their info. That would not be good to share anyone's private info, but 95% win rates. I'll talk to someone, maybe they want to, allow me to show it, and I can do that in a later video. So again, some of these have had good streaks. Obviously, the market's, like I said, the market's been on tear. So in general, my average profit target is 63 to 65%. So if you kind of look at it from that standpoint, and I'm allowing it to use 7,000, I mean, right now it doesn't have any open for the 100 day. But that's just basically how it's been going, and pretty much just letting it roll and making money there. You'll see, and I'll show you a couple of kind of updates of new positions and current ones. So that's the rundown on the MES. These are all just the automated trades again that are being put on the options autopilot. And I just like the one-on-one. It's pretty flexible, pretty universal kind of strategy. Like I said, it has the ability to make some money if the market falls slow enough, but it mostly will just make money when the market is going up, and you're collecting that income. So let's update. Intel has been kind of the long-term big winner. Let's go over here. There we go. Has been the longer-term big winner. I sold some puts. If you haven't watched the previous ones, kind of following along, obviously, was long calls. Frustratingly, went into a call spread, and that's when it really ripped. So probably missed out on $50,000 just in this account, and so that's obviously frustrating. Now we have another situation like that has happened in service now, and also I guess boost run. So I'll talk about those in a second. NVIDIA I have puts on very short term. The reason I did this was kind of a hedge. I basically was thinking if NVIDIA misses their numbers, it's going to impact the rest of the market. And I am basically long in other positions, so that would be sort of the hedge against the market falling. So it hasn't really fallen that much. You can see on the 195 strike, I only have 3 days. I guess tomorrow it'll only be 2. If it falls at all, I might just close this out so it's not a 0, and then roll it to a little bit farther down. Just because, again, I think there could be potential for people to do profit taking in this name if we get some bad news or people think valuations are getting too high in the space, so they can kind of roll them, right? So I think that would be one of my thesis for being not necessarily short, but betting on a decline, right, in NVIDIA. And I think they could definitely approach this 195 level, which is why I chose that strike originally. And I figured if it was going to blow through it, then I really make some money. I'll probably keep kind of similar thought process there. If I go longer dated, I might go to the 170 or 180 strike puts. Just depends on what the Greeks show. But stay tuned, subscribe for that. I will update when I kind of adjust that. So SOFI is finally getting a bid. And I don't know exactly what news came out because, again, I was moving. I had put on a half position, and I've been down on this name year to date, right? Because I've been in it and out of it a couple times, and so far I've been wrong on it. It's kind of seeming like it's perking up and popping back. Rates are still climbing, which usually impacts financials in a negative way, which I definitely think it has not helped SOFI. But there was a headline that I think Anthony Soto, the CEO, basically bought $2 million worth of shares in the past couple months, I believe. I don't know if that's what hit. But you can basically see this broke. I kind of closed it, but was saying it's kind of hovering right around that support. But I followed the rules. But then when it broke back above here, I did kind of preemptively buy half a position. And then I believe I bought, it could have been here that I bought half, and then I bought another half, I believe, when it was starting out. And then it finally did pop, and then it popped the next day. I'd have to go back and see my activity. Let's see here. 14 days. Yeah, so I must have rolled. I'll have to look it up. But anyways, I basically kind of got back in, legged in, and I am a little bit longer dated. 201 days for this to kind of play out is my plan here. I'm not going super far leap strategy because there's a pretty big volatility just in the bid and ask, so it kind of messes with your P&L, which gets a little bit annoying. But my thought was that obviously it's already started and kind of did fill this gap. I think it could definitely get up to the 20 level. If it gets above 20, I will add to my position. Because again, I think it's a psychological level. And then if it gets above 24, which if you guys recall, that was like the previous kind of all-time high, and then it did break above that. It seemed like it was going to really rip, and then it has since fallen back. So I think that'd be a huge signal if for some reason it broke back above the 24 and then also went to a new high. But I think if it gets above 24, it's probably going back to a previous high, right? So we will see what happens with SOFI. So a couple of the newer positions, ServiceNow and BRUN, kind of AI related. Well, obviously BRUN is AI related in that they're kind of AI infrastructure, AI cloud. They basically obviously allow people to rent compute power. And they did a SPAC and went public that way. And my original thesis was basically that it was a pretty small market cap, and the kind of ability to, I mean, the market is just going crazy for these types of companies. And I think that they were approaching, from what I can understand, their expenses more responsibly than like a CoreWeave would. But we got a lot of uncertainty here. This is already literally, I think, tripled from, typically SPACs. It's like the acquisition happens, I believe, at like $10, right? And there's a certain value there. So you can literally see once the merged company started trading, it already traded above its range of 10. It was at 18, right? And then now it's just started to rip. And I guess I didn't even realize that at some point it got to 40. So the annoying thing is I didn't buy straight calls. I had actually sold some puts, and then bought some call spread initially, just because volatility and the prices on these positions is so widespread and it was so high. So I just kind of, again, I didn't think it would triple or even double, I guess, within a week or whatever it was. Had I thought that, I would have just bought straight up calls, right? So I'm just trying to manage my risk by doing that. But obviously now I've reduced my upside. So you win some, you lose some. The good part about that is that obviously I'm at a 25-35 strike. It's in the money. And it's almost about to be like fully in the money. So it's not quite at 35. I mean, I guess it was at one point. If it keeps going, again, if it's like an Intel scenario, I'll be kicking myself. Maybe I'll buy back a short call or two just to have a little more upside exposure. But if I am patient and I just wait for this 229 days to elapse, and it at least stays at this level, I have no clue if that'll be the case. But if it just stays at this level, the current mark on this spread is 280, right? It should expand to $10. So I will basically earn 3 times my money, which in this instance, in this account, it was only $2,800, but then it expands to $10,000 from there, and that's a very good percentage return, very good, I guess, dollar return relative to the account size. So, but again, it's not as good as, when you get really correct in a direction, kind of like we did on Intel. ServiceNow is the same exact scenario. So you can see after hours, it's at 134 and it closed at 124 on Friday. Obviously, it's a slight volume, so we don't know where it'll actually be Monday. But same kind of thing was software companies. SaaS was getting very hammered by like the idea that maybe AI was going to disrupt all these names and nothing was going to make money anymore, which is very dire and it didn't necessarily seem to be realistic. So on one hand, I was just kind of looking for a little bit of a jump back. I didn't expect this kind of move, of course. I mean, nobody could have really expected it. I was just watching this. This looked kind of like a bottom right here. It had been put in. And so I'm trying to think of how far back I actually opened this position. 4 days. So yeah, it was pretty recent. So I think it was Thursday. So let's look at Thursday. But I was just kind of initially legging in. I bought a call spread again because the calls were so expensive. Yeah, basically this was, I think, opened enough to where I was like, okay, it's probably going to close above this level. Bought a call spread, or maybe I did it this day. Yeah, maybe it was this day, and then I added to the spread. I think that should be in my activity. So, right. So I basically, maybe I got up in the same day. So that was all May 28th. Oh, it reset. Okay. No, that's correct. So basically the 28th I bought, and then I bought again because I think I was up more. Or actually, I think it was down and the spread was a bit cheaper, and I was like, this seems weird because it's in the it seems like it's mispriced a little bit. So I was just wanting some upside exposure, so I think I legged into just the call spread. So again, I did the call spread, meaning I bought and sold the two different strikes. And had I not done that, you kind of see what happened, and I would be up $8,000 or almost $9,000. Yeah, I'd be up $9,000 on just these calls, right? But the difference is that I would have had to risk $10,000 effectively. Or whatever my trade price was, which was, yeah, $9,500. Could I have done that? Sure. It would have been it would have been definitely risky for this account size. I wouldn't recommend doing that. I typically like to go at max 10%, and I'd only be risking 5%. But generally, I like to go 5% and only risk about 2.5% to 3% per position. So in that instance, it would have been too much risk for this account. So I kind of, again, kept the plan, kept the discipline, but it gets very frustrating because literally in a day, when you see it jump, I think it was up 15%, and you could have made $8,000 in a day on a smaller account. Like that's pretty huge. So that gets a little frustrating. But either way, again, similar scenario. I was kind of wanting to play a run up into earnings, and my expectation was that I think some of the negative news was overdone. If this starts to really pick up again, I mean, imagine if it rips back to 240. I don't know if that's going to happen, but even if this kind of is a bottom and it plays out, it could get to 160. I don't know. We'll see what happens there, but even if it just stays here, and the good thing about, I guess, ServiceNow specifically is I'm a little bit shorter dated because I was wanting to do it, having them expire after earnings, but and not necessarily before, to give me a little more time. And then once earnings comes out, I'm sure the volatility will collapse, right? So if they're in the money and above the 130 strike, then I would assume the call spread should expand to close to $10, right? So again, similar scenario. I have a little bit less upside now, but it's already expanded to $4.20. I bought it for $2.72. Now it can still expand to $10. So if very few days have passed, and for some reason, if this expands to like $7 or $8, I might just take that profit, because getting, a majority of the profit in a very short period of time, it's better to just kind of good use of capital, kind of either change up the strategy a little bit, or use that profit return to try and generate more profit elsewhere, or just maybe roll up on service now. And who knows, maybe the way I'll go about it is I will take that profit and then increase it, or go farther out of the money and just do straight calls, but we'll see. But definitely subscribe. I will update you regardless. I don't fully have those flushed out. Just kind of depends, because those have ripped a lot more and a lot further and faster than I would have expected. Again, that's all good, but then you just gotta assess what you want to do. Intel, interestingly, is kind of now hovering and selling off, looks like, in the after hours / pre-market of Sunday. So we'll see what happens there. Again, you can kind of see now my shift of, if you look at the Greeks a little bit, I was typically long theta, right? I was getting paid every day by the one-on-one strategies, the automated income trades. And I still obviously do make money, but you can kind of see now that I'm only, long the put on ES, and I'm long puts on NVIDIA very short term, and then I'm long calls. It's all negative theta on these, on those types of positions. So you can kind of see how it is when you're only long the calls themselves, or long options, right? So you can see in general, I'm actually losing $104 a day by doing this. And that's the, I guess, downside of only buying options and also buying shorter term options. So that's where I don't really encourage usually buying shorter term, like definitely not buying within 90 days. Right? If you're taking a directional play, I think you need to at least do 120 days to maybe 180 days to give yourself time for it to play out, and the theta decay is not so huge. You're not just totally bleeding out. So but again, I was strategically doing the NVIDIA one, kind of knew this would be the case. It's only $500 in the grand scheme of this portfolio, and I thought it was a very specific hedge for me. So that was why I approached it that way, and I was okay kind of bleeding off all that money, because you can see that's the biggest drag. So once these are closed out, obviously I will be positive theta technically again, but it's just you got to be aware of those things if you are trying to deal with options. So in general, the market obviously hitting highs. I won't go into the full analysis here. In general, I guess there's not much to say. Like, the market just seems to want to go higher, but you definitely still have to manage your risk. I haven't really checked on RIVN because I had cut it, but I bet it's probably kind of rallied back a little bit. Yeah, see, I cut it here, and now it's just kind of ripped back, kind of where it might make sense to take a position if it closes again above this level. I might take a smaller position again, since I added in some capital on this, and I've obviously had some of my automated trades roll off, so I do have a decent amount of capital to put to work. I might just add another long, and then probably try and find some shorts or some put positions to kind of hedge, so it's not all just directional exposure to the upside. You kind of need to smooth out that volatility and your P&L. So working out pretty well in terms of directional side of things. Again, we're trying to automate some of that more on options autopilot to be able to, one, find these types of positions, and then kind of automatically take directional plays and then manage the risk. Because I'm basically trying to take my progressive risk management and have this just be like a setting. So anytime you're going to do a long position, or a directional position, I should say, if you choose to, you could have it manage it the way that I would personally manage it. So that is kind of my goal, because I don't necessarily want to be watching. And as we saw with Intel, it would have been better to just not be paying attention and just have it go and have the system be able to manage it the way that I would like, and not have to pay attention, because that's really how you can compound returns. in general, and just if it's a smaller account, as this example is. So appreciate you guys watching. Definitely stay tuned for more information. We'll see. It's obviously nice to see, the account going up, this account, and getting some of these directional plays correct. I do think that is good, but you always got to, again, manage the risk. Don't do anything that I'm doing. This is all educational purposes only, but you can kind of see how I'm positioned at this point, and I will update people as I either add or take away from that. So appreciate it. Have a good rest of the Sunday, and we'll see how the market opens on Monday. And remember always to manage your risk and learn, live to trade another day and learn as well. So talk to you guys later.